Hello everyone, this is Trader Sigban here. You're welcome to our channel. This is a beautiful new week with 38, and we are going to be looking at how the market intends to move this new week. Now, there's so many things to consider, especially if you're a new trader. You want to consider the right strategy, you want to consider the direction of the market, you want to consider your entries and your risk management, which is very important. Entry, exit, risk management. These are things that is very important for you as a trader. So the best thing I will advise you is ensure you get the right education, ensure you are bold to execute what you learn, and also gain experience in the process. These are very important E's that you need to know. Education, execution, and experience in the market. So what I'm about to share with you today is a forecast for three major instruments: indices, which is SP500, then currency pairs, which is GBPUSD and EURUSD. And those three commodities or instruments, we're going to be looking at the direction of the market for the week 38. So without further ado, let's jump into it. Now, before we continue, I want you to hit the like and subscribe button. If you're new to trading, you better hit the subscribe button because it will change your game in the market, because the things you're going to be learning from this channel, it will help you to know exactly how to trade from the top-down analysis and also understanding entries and exits. So it's very important that you subscribe and hit the like button. Now, this is GBPUSD. Now, this is the daily time frame that I'm looking at. As you can see on the daily time frame, we are bullish. The market is obviously a bullish market. Now, the problem is that the market is retracing. So we have a retracement section around this place. As you can see, the market is retracing here. So we have this impulsive move that the market is creating. And now we have this section here that the market has created based on pullback. Now there's an impulsive move from here to here, and the market is retracing back down. So the question is, what is the market doing? So the first thing I want to show you here is to pay attention to this high and also pay attention to this place. So that's the place I want to mark. So let me just use the right tool for it. So I'm going to first of all put a high here, and I'll create another section here on my, this is the GBPUSD. Now, this is the area you want to focus on first in your trading. We will be looking for more sales if the price break below this area. We'll be looking for buys much more around this area. So the first thing is, how do you know that the market wants to retrace and start pushing back up, or the retracement is done? We are not sure yet, but we can only tell that the market has rejected at 38. Now, here is the idea. Why is the market rejecting at this level high? Why did the market close like this candlestick behavior? Now, if you understand price action, it tells you that the sellers are much more in the market right now. It means that the sellers are pushing price into the market. So the question is why? Why is the market reacting at level? What is going on here? One thing is you understand in the higher time frame is market structure. First of all, we are bullish. Overall, we are bullish. That's why the market is rallying. But what we see here is a retracement. And this retracement only reacted to 38 of this impulsive move. Let me put the fib so you can see. So from here to here, we have this impulsive move. You see, price reacted to 38, which is also acknowledging this price action here. So, but what we want to see is that price break below this area to continue to the downside, or price continue up. Now, the problem is we can only tell that price came up here, came down here, and returned up. Okay, that's one look of it. So if there was a proper an extended retracement. We should have been expecting price to come all the way to what, 60, 50 or 61 before rallying up. So the question is, does price still want to come down to that level? Does price want to come down to 50 or 60? We are not sure. So the best thing to mark is the areas. You want to mark the 38 and you mark this previous high where price rejected from. This area here, this market structure here, where price rejected from. So that's why we're looking at this area, that we could trade to that. But another thing I want you to pay attention to is that it's possible that price want to come all the way down. As you can see on the left, on this particular section, the market structure here is this low. And we have a break of market structure. So the market broke by pulling down and retracing back up. So the question is it coming back down? That is what you want to pay attention to. So looking at this now, how would you tell? Well, based on market structure, we can see that this was a low that was created, liquidity pool, and then the market smashed up to the upside to take out liquidity and came back down to take out liquidity on the lower side and now pushed back up and closed in a candle of indecision. So the first thing I want to do is to put a fib there also and observe what the market did at that point. Now, I want you to pay attention to this. First, we can see that the market reacted to that 61. So there's a reaction there. So the question is, where is it going? How do you trade on this part? Well, I will advise you to look at first the previous daily candle. So on this case, we're looking at two areas to mark. First, we're marking that the price may come to this gray area here. That's what we're looking to trade to for this week. So for that reason, we will remove the fib that was there before. So we'll remove this big fib on the higher time frame, this bigger fib. We'll take that out. And now we're looking at this smaller fib that we just created. And that's number one. Number two, we want to mark the previous day high, which is this candle high, which is there. And also want to mark the candle previous day low, which is also here. So this is what you're going to be doing. Now, I've done several analysis. This one, you got to pay attention to this one because of the way the market is. No analysis are the same. So you have to pay attention to this one because of the way the market is. So I'm going to go to a lower time frame to show you something. On the 1 hour, I want you to pay attention to this area. When you're trading, first you want to see if the market breaks these levels. Once you find a break at these levels, wait for a pullback on a lower time frame, like 15 minutes, 5 minutes. Look for that break. And then a pullback into that level and trade it to this level. Take your TP. That's number one. And then you will wait again and wait for price to break this level and wait for a reasonable pullback. If it does, then we're targeting this level all the way. Now, why is that? Because it is very important to know when the market is moving from levels to levels. And now that's going to come to you in the training. So you need to understand that through training and educational process. So you'll be able to get the idea. But there's something that price is coming for. And if you check this 1 hour time frame, you can see that there is a liquidity pool at this level. Okay, we have liquidity pool. This is liquidity area that we expect price to come to. And price eventually is coming to that liquidity to take out liquidity. You see, price is coming there to take out liquidity. We are anticipating that price will come there to take out liquidity during the week. So for that reason, prepare for that. Now, this is option. What if price fails to break this level and push up and break high? Very simple. Again, you already know what to do. Wait for price to break above the high, take out liquidity. Wait for price to push above the high, take out liquidity. Wait for a pullback. And if you see price action that it rejects, target this high as your first TP. Take your TP out. And then wait for price again to break above. If it does break above this high, it shows that we are now bullish. Then wait for price to break above the high, and then a pullback on the lower time frame and continue to the upside. Now, this is the place you will take your overall TP. Remember, this is the overall head of the position where we have on a higher time frame. Let me go back to daily again. So show you see this previous high. That's the target. So you want to take your TP there. Now, watch this video again so that you understand what I just did. It will help you greatly to understand the direction at which I'm trading. This is my analysis on GBPUSD. Now, it's the same for EURUSD. Let me move to EURUSD to show you what I'm looking for. Now, I'll take off that fib in a minute so you'll see exactly what I'm looking for. Let me remove the fibs, the drawings. Now, you see, EURUSD also look much like what GU have done. So I'm going to look at it from the same perspective. So the first thing I'm marking on a daily is what the market did here. I'll mark that area. Okay, very important to mark that area. So I will be selling more as soon as price come even lower to that level. Be looking for this area of liquidity that is so obvious that the market may come to. So I'll also take that area as TP area for me in the future. So now I will mark also the higher time frame, previous day high, previous high, and also I will mark this high, which is where price rejected from here on this candle. There was a rejection there. And also I will mark the overall high. Now, did you see what I've done? Now, these are key levels on the higher time frame, which will give us a reasonable price action in a lower time frame. So again, British pounds, Euro USD actually is bullish, just like the British pounds overall market. But there's an issue here. The market is retracing. So this pullback is a valid one. Again, like we did on British pounds, we can see a break of structure 1, structure 2 because of this drop. So here we can put our fib here and drag it to the downside, which is that area. You see now, if you check, price reacted at the 61.8 of the fib. You see that? Price reacted at the 61.8 of the fib. So question, what do we do? How do we trade this market? Very simple. So go to 1 hour time frame. You're going to wait for again price action. At this time, you're waiting for price to close below this area. So you wait for price to close. Patience is the key to this game. You want to wait for price to close below, trade below this area, a pullback into it, and a rejection. And you're going to sell to this level. Why? Because there's much liquidity here that price is coming to. And then you wait for another break. If price break this level, all you need to do is wait for a pullback into it, and then rejection, price action, and then you sell again. A break, the pullback into that price action, you sell again until you get to the previous lows of the day that the market is giving you, until you get to this level. So you just keep selling. But what if price decides to go up and fail to just take out a little bit and then fails to break below this 38 fib? Again, just the way you did on Euro US British pounds, wait for price to break high first. Price must come out of this consolidation phase, break that high and retest and give you price rejection, and you trade and get out of there on a lower time frame, like 5 minutes, 15 minutes. And then if it continue or reject, you could sell. But if it doesn't and it breaks above, wait for a retest. and then continue to the upside. That's how you want to trade this market this week. So mark these places that I've done on the chart. Use this, the Fibonacci retracement I've used, and also mark it on the higher time frame, the daily time frame, mark the liquidity areas, the support and resistance that I marked. And then you want to wait for price to break each of these points. All right, SP500. Now on the SP500, let me go to the daily. Now, looking at the SP500, we are obviously bullish. Price has done his retracement, and now we're buying market. So I traded this pair, British pounds and SP500 this week, week 37, that just ended. So it was a good trade. And first, you want to mark this area first. That's very important because that's a strong key area of what? Resistance. So very important. Price is getting there now, getting close. Okay, so that's on the daily, and that's much you want to do. And also you want to pay attention to this liquidity area. So mark that. So that's all you want to do really. And then in addition to that, you want to mark the previous day high. Okay, mark that. And then if price, obviously, I don't think you should be thinking about the previous day low. Market could want to take out the high first. You want to see price action there. So, but leave that on. And then you go to your 1 hour time frame. So what you're waiting for is a bullish momentum to the upside. So looking at this market right now, we can tell that what you're waiting for is that price will take out liquidity. That's number one. Or create more liquidity and take it out, and then rally up. So the first thing you want to see that market is bullish. So what you want to see is that price should take out this high and then pull back, and you continue to the upside to buy. So remember, this is SP500. So it's like in a strong, it's like US30, very strong profit margin that you can get, and then you can continue to the upside until and unless we hit our previous high. Now, if that high is rejected and it starts trading down, then you can sell. If that high is rejected, what I mean by the high is rejected is that if price reject this high and then take out liquidity and close below it, then and it reject by price action, you sell. Why? There is obvious liquidity here. So you have to always pay attention to price action. Very important. If you don't understand price action, go study it. Candlestick behavior, you need to know, because these are liquidity. Market will close, take out liquidity, close on a weak candle, like a bearish candle. And you want to see that it failed to pull back. And that means it fails to break above and reject at the pullback. And then you want to continue to the downside. But if you break, you want to, for you to buy, you want to see that price break above the high. Take out liquidity, close above that high, and retest. So you want to see that price does this, close above that high, and then retest, and you continue to the upside. And then you can target major psychological levels for profit margin. I think that's all I need to explain on these three pairs. Remember, GBPUSD, we're looking for either a buy if price push up and break above this level, or a sell, which is an obvious trade that might happen because of the previous day candle. And again, EURUSD might go in that direction. And SP500, we're looking for buys, but it's a very strong area of consolidation that we're facing. We can see that price is close to the previous highs, where we have a lot of liquidity sitting there. So it's possible that the market want to go up, take out liquidity and come back down, or continue going up. We will see. But make sure you pay attention to this because the market is bullish. So I'm expecting price to continue to the upside on SP500. But if it fails by rejecting at that liquidity level, previous high, support a resistance level, then we should be able to look for a sell and then take it down until all these liquidity levels, liquidity are taken out. Okay, guys, that's it for today and for the week 38. Obviously, I think we should be looking forward to, I think week 39, actually we're looking at week 39 now. So we should obviously be looking at more trade coming in and beautiful opportunities awaiting us. Thank you guys. If you're new to trading, subscribe and there's more. If you have any questions, if you want me to do more of any of the pair that you trade, comment, put it in the comment section. And if you have any questions concerning this analysis I've done, please leave your comment on the comment section. I'll be able to get back to you on that. Now, the links are in the description below. Just follow them on our trading channel. If you want to join us there, follow all the links in the description. Thanks, guys. I'm out. I'll see you next week. Bye for now.